What is up, flippers? It's Marcel here. Here I'm with a new forecast video for the upcoming days and the week ahead, where I will break down GBPUSD and EURUSD. First, I will start with EU, and I will start the breakdown on the 4-hour time frame. So what do we have here on the 4-hour time frame? What are we expecting here? Obviously, we have a daily low point marked out previously and a daily high point, and we know that the higher time frame bias is bullish. So the daily time frame is doing this structure currently, where it's creating higher highs, higher lows, higher highs, higher lows, repeatedly. So we had the less recent daily low point, less recent daily high point, and price is currently in the pullback phase of this overall daily leg. So we had this upside movement, which is the less recent daily leg, and the downside movement is the pullback of this daily leg. So we are expecting some rejections on a valuable demand area. We've already seen a valuable rejection on the valuable demand, which is located here. This 4-hour demand has started the swing breaking movement to the upside, which broke about the last recent daily swing high point. So this was the last recent daily swing high point, which has been broken by this 4-hour demand. What else can we see? We can see that price has already reacted on this demand level and gave a strong rejection and reaction, and also confirmation on the lower time frames. But currently we are talking about the 4-hour time frame, so let's just focus on this one. So the rejection has already happened here, and price started this nice movement to the upside after mitigating the full region of this 4-hour zone. So in terms of the higher time frame structure, higher time frame trend, we can expect two things. The first thing I'm going to show you is the likely setup that is going to happen. So this is the most probable setup that is going to happen, is when price is going to confirm some 15-minute demand regions right here, and will continue this overall bullish order flow to the upside, where in the end it will be able to reach the daily high point, leading to a swing breaker structure on the daily high. So this is the first scenario that we are expecting. Of course, this is what we're going to follow, since the lower time frame signals has already arrived. We've already come from the lower time frame. So basically, this is the first scenario that we are going to follow in terms of the new week's price action. But there's another thing that can also happen, is if price breaks below all of these demand levels that will be marked down on the 15-minute time frame and will break below the 4-hour zone, then we will have a nice bearish continuation order flow all the way down to the extreme demand, which is located here. When this extreme demand will be mitigated, we can expect the exact same scenario as we are expecting it here currently on this swing structure breaking demand area. But as I said, we're going to focus on this long order for movement, which will take us up to this daily high point break. It is really likely that it will happen. I'm really expecting that this overall movement over a bullish order flow and trend continuation will happen in the upcoming week or weeks. So let's just drop down to the lower time frame on the 15-minute time frame and see what can we do on the 15-minute time frame. So on the 15-minute time frame, we've already had a change of character, right? So if I zoom in, you will see that price has mitigated this demand region. It didn't break below it. It just mitigated the full 100% of this region. And after the mitigation, it just reversed to the upside with a nice inefficient push. So the change of character has already happened here on this high point. The reason is we are counting this as a change of character, as I already explained it in the previous webinar, is that price broke the structural low point here. Just map the structure out. That's the cleanest way. Price broke the less recent structural low point here with this movement. The movement has been started by this high point. This high point has been broken by a wick with the following movement to the upside. We are not really counting this low point break here as a break of structure because it didn't happen with a body closure. So this won't be a character changing point because it didn't create a new low point. This is a character changing point to the upside, which has happened. So price changed the character here. After this one, price changed back the character to the downside here with this movement, meaning this high point will be the new character changing movement. If price breaks above this high point, the character will be changed back to bullish again. So basically, the thing that has happened here is that price swept out all of the early buyers on this region, took all of their stop losses with this movement, with this wick to the downside. So those stop losses, those old orders can be reopened on this push to the upside, which will be the real movement. So the real movement has happened. Price changed back the character to bullish again. And basically, this overall character changing movement has happened from this extreme, from this decisional, and that's why we marked out both of these areas. This is the extreme of the inefficiency, and this is the direct decisional that has caused the direct change of character. After this one, price has reacted and rejected with a small candle, this one right here, on this supply region. The rejection wasn't strong enough to create a pullback down to this demand, it has flipped the supply, leaving a flip zone behind. That's where we tried to trade in the previous Friday's live webinar. Basically, this region has been mitigated. We took a stop loss here because we entered with a risk split position. The decision wasn't strong enough to hold price, but the extreme wasn't valuable enough to set a limit order on because it was part of the liquidity double bottoms and triple bottoms liquidity. But technically, prices reacted on the extreme, leaving us behind and breaking the structure to the upside. So that's what has happened here, meaning we have a nice 50-minute bullish order flow, confirmed bullish order flow that is leading up to a higher time frame supply and leading up to fill out the inefficiency that has been created here. So we have a huge inefficient gap started from this 50-minute supply region. We're going to mark it out. This will be our first basically higher target point, because we are going to target this supply area with our swing TP. So if we can potentially catch this buy opportunity somewhere around here, which I will explain what we will do, with a 3 pip stop loss, which is our maximum stop loss, targeting the supply will be almost, I mean, it will be 41 risk reward ratio. So we have 41 risk reward ratio room here to trade. It doesn't mean that we have to fully hold our position after this supply. It means that we have 41 risk reward ratio room to trade longs, which is pretty nice because 41 risk reward ratio is a lot. So we can just enter in positions continuously, entering a position here somewhere, targeting 1 to 10 risk reward ratio on a previous swing high point, waiting for a pullback, entering here again, targeting the swing high point again for one more 1 to 10 risk reward ratio, and doing the same thing over and over again until price reaches this supply. We are far away from this supply, so I'm not really going to explain what will happen after mitigation of this supply region. So yeah, we are currently focusing on the longs. So how can we possibly lead up to this demand region? Supply region. So we have a new demand that has caused the less recent breakout structure to the upside, right? So we have this demand marked out, which caused this less recent breakout structure to the upside with a body closure and the really nice volume inefficiency push. So the thing that we are going to do here is that we are going to wait for the mitigation of this demand. If the mitigation of this demand will happen, we will be able to confirm it with a change of character, with a flip, with one of our entry models, wait for our criteria, entering here, and we will be able to target this weak high point, because this will be a weak high point if it won't be able to break below this low point. If it happens, if we can enter here, this will be a pretty nice 1 to 10, 1 to 15 risk reward ratio trade, which we can take. But if price can't react on this demand region, then we will have a nice bearish scenario, which with the pullback of the overall 50-minute bullish order flow, we will be able to take shorts targeting this deeper demand or the demand below it, the extreme, as you remember. After mitigation of these demands, we will be able to confirm them again. If the confirmation happens, we will be able to take longs again, targeting some weak high point here, or maybe there will be a weak high point here, but we will be able to target those weak highs if these demands are getting confirmed. So what happens if these demands won't be able to hold price? Basically, after the break of these demand regions and after the break of this low point, we will have a pretty nice bearish scenario, as I explained, all the way down to the daily extreme level, which is somewhere around here on the 4-hour time frame. So these are the plans we are waiting for on GBPUSD. I will just check if there's any 5-minute zone that we can mark out as a refinement. But currently, there's no 5-minute refinement areas can be found here in this movement, because this was just one huge inefficient push. We can refine this to this candle and we can mark out the refinement, which I will do. But basically, it's pointless because this refinement is almost matching with the 50% of the 50-minute area. So likely we will have a 50% mitigation here. And after 50% mitigation, we will have a nice confirmation and the long scenario to the upside, targeting this high point. If you can catch that long here, let me just check. With the 3 pip stop loss, I believe there will be like a 10 risk reward ratio room, or even more. Yeah, 15, almost 17 risk reward ratio room is there to trade. So yeah, we will have a nice bullish scenario. But if this breaks, then we will have a nice bearish scenario, which will lead down to this demand level, and that will be like, with the 3 pip stop loss, that will be like a 1 to 6, 1 to 5. Yeah, it will be 1 to 7 risk reward ratio target point, which is also fine. 1 to 7 risk reward ratio is almost enough to pass the challenge. So if price breaks below this demand level, we will have a nice bearish scenario leading down to this demand, which will end up in 1 to 7 risk reward ratio. So these are the things we are waiting for here on GBPUSD. And sorry, this is EURUSD. And yeah, we are currently bullish. We are looking for those bullish trades. And there will be a correlation, which I will show in between GBPUSD and EURUSD. I'm switching to GBPUSD now. So on GBPUSD, we have the same daily high point, same daily low point, and we have the same 4-hour demand level, which broke the swing high point. So there was a last recent daily swing high point, which has been broken by this demand with nice inefficient push to the upside. Price on GBPUSD exactly reacted on the same swing structure breaking demand, mitigated the full region of it. The only difference here is that price even swept liquidity into the demand. And after a deep region mitigation, it just reversed to the upside, leading to several 50-minute change of characters, just like on EURUSD. So the thing we are going to concentrate here on GBPUSD is the same as we are going to concentrate on EURUSD. We are going to look for demand mitigations, confirmations, longs up to some higher supply region or higher weak high. For example, this one, refined on the 50-minute time frame, which will be this one. I will show it on the 50-minute time frame. So if price can break, if price can confirm these demand regions and breaks below them, breaks below this low point, we will have a same bearish scenario leading down to the extreme, which is the same distance away as EURUSD is away from that demand. So if this low point break happens here, we will have a nice bearish continuation scenario down to this extreme level. There is liquidity above it even here. So it's going to exactly correlate with EURUSD because we have the same movement happening here, you know, reacting on the same structural breaking, swing structural breaking demand as on GBPUSD, having the same extreme level here as on GBPUSD. And basically the scenarios are the same. So let's just switch to the 50-minute time frame and see what has happened here. So on GBPUSD, price cleanly changed the character here to the upside. This was the last recent high point that caused the last recent break of structure here. Price just changed the point with the body closure here. And we have a nice demand, extreme demand level marked out. This is the extreme level that is far away from currently. It's far away from price currently, but we have other demands that we can mark out. And here will be one more correlation that will be important in between EURUSD and GBPUSD. And I will show it on the 5-minute time frame. But first, on the 50-minute time frame, we have another demand level here that caused the break of this supply basically on the 50-minute time frame, caused the break of this high point, and caused nice inefficiency here and lots of volume candles. So we have this 50-minute demand level marked out also. But if you switch one to the 5-minute time frame, you will see something else. On the 5-minute time frame, we have a perfect rejectional candle on this less recent, really efficient, really inefficient supply level. So this demand reacted on this supply, and from this level, from this small candle, price has caused huge inefficiency and huge volume to the upside, which flipped this overall structural high point and supply. And here's one more thing, which is really important. If you check EURUSD, it's currently 14 pips away from this demand. If you check GBPUSD, it's currently almost 14 pips away. If you are taking considering the 50% of this demand, we are 14 pips away from this demand. And that's why we're going to prioritize this demand over the one below it, because likely if EURUSD reacts on this candle, reacts on this less recent demand candle, then GBPUSD will react on this 5-minute refinement candle, and it won't come down to this 50-minute less recent candle. Because on the 50-minute time frame, this is the less recent demand level. This low point has caused this nice movement to the upside, and this high point wasn't broken with a body closure basically. So we are inside of this high point range and low point range, and we have this less recent demand level on the 50-minute time frame. But this 5-minute is really important. This 5-minute candle is really, really important because it's the same distance away as EURUSD is away from this 50-minute demand level. So that's what we are going to do here. We are going to aim for these 50-minute and 5-minute demand levels on GBPUSD. If price mitigates this level, if price mitigates this demand, we will be able to confirm it. If it happens, then we will be able to take longs, targeting this high point. It will also equal like a 1-to-17, 1-to-15 risk reward ratio trade. If it breaks below this one, we won't be able to take shorts because there won't be enough room here in between this demand and the next demand to take shorts. So we will wait for another confirmation here on this demand level. If it happens, we will be able to take longs again. If this demand level breaks to the downside, we will be able to take those shorts down to this extreme. And if this scenario happens, then likely on Euro USD, we will also see the break of this demand, this 15-minute demand, and we will have the exact same order flow down to this extreme level. So in a nutshell, we are waiting for 15-minute demand reactions or 5-minute demand reactions on both of the pairs. We are looking for those confirmational entries, adding up our criteria, adding up our entry plan. And if the long confirmation happens, then we will be able to take those perfect and beautiful longs to the upside. If the demand level breaks, if a significant 15-minute demand level breaks, we will be able to take shorts down to deeper demand levels. And that's what we are going to do on the upcoming days, especially tomorrow. So that's the plan for tomorrow. And I'm wishing you a beautiful and profitable upcoming week ahead, guys. We will be crushing this week like we did last week. We had more than 100 TP hits in the membership. We had 9 or 8 challenge passes, phase 1, phase 2. We had a profit split. So yeah, we're going to crash this week the exact same amount as we crashed the last week. So one more thing, that tomorrow I'm going to release the 100K Instagram followers discount for you in the Discord. And this will be the biggest lifetime sale yet. So, you know, I will release the sale on Instagram too for the non-members, but that price will be more expensive than the price you're going to see. And the price you're going to see is the lowest price we've ever released on the lifetime plan. So you will never ever see this low price for the lifetime plan. So yeah, if you're planning to join in a lifetime membership, if you're planning to be part of a lifetime gang, this will be a perfect opportunity for you. So prepare yourself, prepare the time, because I will post the discount 1 hour before New York session opens, and there will be limited spots. Only like 5 to 10 spots will be available, because this discount will be so huge that I don't want to give away so many spots. So you have to be quick. If you want to take this opportunity, if you want to take this discount, you have to be quick with it. So that's it, guys. Wish you once again a beautiful and profitable week for the upcoming week ahead, and see you tomorrow.